Hey everyone, welcome back to Corporate Decoder. Today, AIRT Incorporated just filed an 8K announcing an at-the-market offering, and I am seeing a signal of potential dilution that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing reveals that AIRT is looking to raise up to $8 million by selling more of its common stock, and that could mean more shares on the market. AIRT Inc. Exact name of registrant as specified in Charter Scroll. So what exactly does this mean for investors in AIRT Incorporated? They are essentially opening the door to sell more of their company's stock directly to the public. This is often called an at-the-market offering. Scroll pursuant to Section 13 or 15 of the Securities Exchange Act of 1934. Scroll this kind of filing, an 8K, is a way companies report any major events that shareholders should know about right away. And this one is about a plan to sell stock. AIRT is looking to sell up to $8 million worth of its common stock. Why would a company do this? Often it is to get cash for operations, to pay down debt, or to fund new projects. But it is crucial to understand the implications for existing shareholders. Scroll common stock at NASDAQ Capital Market Scroll when a company sells more shares. It increases the total number of shares outstanding. This means that each existing share represents a smaller piece of ownership in the company. This is called dilution, and it can put downward pressure on the stock price if the market doesn't absorb the new shares well. Scroll date of report, date of earliest event reported, the 10th of July 2026, the scroll. The date of this report is the 10th of July 2026, and this is when the agreement for this offering was put in place. The company has entered into an agreement with Ascendient Capital Markets, LLC. This company, the agent, will help AIRT sell its shares. It is important to note that AIRT is not forced to sell any shares if it does not want to. As part of this deal, the agent will get a fee which is 3.0% of whatever they sell. So if they sell all $8 million worth of stock, they get commission on that. These shares are being offered under a pre-existing registration statement filed earlier. This means the groundwork for selling shares has already been laid, making the process of offering these new shares smoother for the company. Also, as part of the filing, there is an opinion from a law firm, Winthrop and Weinstein, Pennsylvania. This is generally a legal sign-off confirming that the shares being offered are legally valid to be sold. Scroll 5.1 opinion of Winthrop Ciamp, Weinstein, Pennsylvania Scroll, this opinion. Along with their consent is filed with the SEC. It is standard practice for these types of offerings, assuring that the legal ducks are in a row. Scroll 10.1 at the market offering agreement, dated the 10th of July 2026 by and between AIRT Inc. and Ascendient Capital Markets LLC. Scroll the actual agreement. The at the market offering agreement is filed as an exhibit. This is the core document detailing how the offering will work between AIRT and the agent. Scroll B. Thurveen Tracy Kennedy, Chief Financial Officer. Scroll the filing is signed by Tracy Kennedy, the Chief Financial Officer, indicating this is an official action being taken by the company's management. Looking at the bigger picture, AIRT Incorporated, which we know has a market cap around $19.2. Pears Hair is engaging in a move that could significantly increase its share count. This is not necessarily a bad thing if the company uses the funds wisely to grow its business. However, from a shareholder's perspective, it is always a point of caution. Think about it this way. If you own a slice of pizza and the pizza maker suddenly decides to add more slices to the same pizza, your slice is now a smaller percentage of the whole pizza. That is dilution. Historically, companies that frequently use at the market offerings without a clear and immediate use of funds can see their stock price struggle. We've seen similar scenarios with other companies where an increased supply of shares can weigh on the stock price, especially if the underlying business isn't growing fast enough to justify the new shares. For AIRT, the key will be how effectively they deploy the capital raised from this offering. My biggest concern is that this offering, while offering needed capital, could dilute existing shareholders' value if not managed strategically. What I am actually looking for is clear communication from AIRT on exactly how this $8 million will be used and the expected return on that investment to shareholders. And the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Check out the Discord in the description.